Did you know that 74% of Americans have a mortgage interest rate of 5% or lower? With rising rates, tight lending conditions, that means that there's never been a better time to explore creative financing. But exactly what is creative financing? How can it help buyers, sellers, and investors in today's market? In this episode, we are going to chat with Andrew Murray, one of the team leaders in the Subto community. And we're going to chat all about what is creative financing, what is Subto, and how does it help buyers, sellers, and investors? And what, most importantly, does it make sense for you? If you've ever wondered how to buy or sell a home without needing a traditional bank loan, this is the episode for you. Don't miss this episode. Hey, Andrew, how are you doing today?
I'm doing great. How are you?
I'm doing good. It's snowing, which that's cool.
Yep.
Yeah, the weather is kind of crappy, but that's okay. So I am so grateful to have you here today. Again, I'm Carrie Carrico with Carrie Carrico Real Estate, and today I have the famous and fabulous Andrew Murray. He is a big time investor. He does a lot of creative financing. I know everyone's like, what is creative financing? So that is what we're going to talk all about today. Just the general points of what it is, how does it work, how would it, benefit you as a seller or a buyer, or what, just how it all works and what might work for you. So let's jump on in, Andrew. First of all, tell us a little bit about you and how you got into this world.
Yeah, great question.
Yeah.
Probably like a lot of other people, honestly. I was in corporate America for 13 years,
Yeah.
kind of ran that whole, gamut, and
Yeah.
just kind of got tired of it. There was corporate America, once they lock you in, unless you are changing companies, it's a very slow
Yeah.
grow.
Yeah.
So that was it. I was kind of reaching a peak is what I felt in corporate America. And I was just kind of tired of it. Same old thing,
Yeah.
watching massive cuts and, friends and colleagues just get dumped like it was nothing.
Yeah.
And then kind of really started around COVID and, I don't want to get political, but like, forcing people to do things and like, they forced me to, and whatever, like I did it, but
Yeah.
I wasn't a fan of it. And then like they forced everyone to do this thing and get all these shots and then end up cutting everybody anyway. And like just rubbed me the wrong way. I'm just like, like I'm okay to do that stuff, whatever. It's a company, force it on us, but like don't fire them like a year later.
Yeah.
That was a choice that they made to stay here. And yet, so like that stuff started rubbing me the wrong way. It was very evident of like I was just a number. They didn't truly care. And then the final straw was they said, hey, you got to move to Dallas or you're out of a job.
Oh.
Oh, and by the way, you have to pay your way there.
Oh,
Oh,
fun.
there's no pay increase. So I'm like, oh, I'm going to take a $40,000 pay cut to move my entire family across the country for no security that I'll be there longer than a year.
Yeah.
Um, and all my babysitters and family are here. Like, I'm good. No, thank
Yeah.
you. So in corporate fashion, my very last day was on Thanksgiving Day. That was like the day I got let go. So it's just like, it's supposed to be a holiday. I was like, actually, today's my last day. But
Yeah.
most people were sad. I was like thrilled. I'm like, perfect.
Yeah.
This now gives me a reason to go full time into this and dive, really, really dive into it. So
Yeah.
that's what I did. Got very lucky and found Pace's community early on
Yep.
and, and kind of made that leap.
Yeah.
Uh, and then got into the community and just like absolutely drinking from a fire hose of knowledge.
Yep.
And, probably what took, I would say, most people doing things on their own or, that whole, would probably take a decade. And I
Yeah.
felt like I consumed that amount of knowledge in like 6 months. And then, yeah, just started diving in, started meeting people and connecting and being a part of the community and joining teams and just, started ripping deals really. And obviously once you're in the mix of doing the deals, that's really when the knowledge sets in, I
Yeah.
would say, is because it's practical now.
Yeah.
Um, and yeah, just from there. And then next thing you know, it's like I'm in these crazy deals and I'm learning so much. And
Yeah.
I have now strategies to work on properties that otherwise would normally be thrown out by the entire industry,
Yep.
where we can make money on it and we can help out a seller. We can make money. We have agents that get paid. Like everyone's getting paid. And once I really started to see that, it was game on for me, really, just to go full on because the vision for how to be successful was there. And yeah, that's really it.
Yeah. Yeah, for sure. And that's how I met you because we did
Yeah,
a deal together. So
absolutely.
for people that don't know who Pace is, explain like who Pace is in the Subto
Well,
community because
I'll
things
try to make this quick. This is a
real
long one.
quick. Yeah, because we
Yeah,
know.
Pace
Yeah.
is he is just an incredible mentor, leader,
Mhm.
visionary. He's somebody that got a glimpse of what was possible and took it to levels not most people couldn't even imagine, and then did that. And instead of just sitting back and keeping it for himself, he came up with this network and community, where he's sharing that knowledge with all of us,
Yeah.
and giving us the strategies to go do exactly what he did. And he's just cultivated the greatest real estate community known to mankind. Probably will never be replicated, never was done before. It's truly a one of a kind. And I say that like not joking a bit, like I'm dead
Yeah.
serious in saying that. 80% of the people probably, this is a number I just made up, but I've just
Yeah.
heard it so much. 80% of the people have like been to other mentorships,
Hmm.
and then they land here and they're like, oh, finally, this is the one.
Yeah.
Like that's what this was like. This is the one that everybody ends up coming to when all those other ones fail or end or don't really deliver. This is a lifetime membership too, which is very unique, right? It's like, hey, come in, learn. Maybe the first 6 months is a mentorship, but then once you actually get into it and it clicks, you're like, oh, this is a community.
Yeah.
I've only done deals with people inside the community.
Yeah.
Um, you weren't in the community yet, but
Yeah.
I was still backed by the community when we were doing the deal. So it's
Yeah.
like, no matter what, every deal I've done, there's been at least 2 to 3 people from within the community that are on it, whether it's TCs, lenders, partners, dispo, acquisition, whatever it may be. It's all just one large partnership, which is amazing because there's no answer that you can't, or no question that you can't find an answer to. So yeah,
Yeah. Yeah, for sure. And I definitely hit you up with a lot of questions. Just
yeah, I
because
love it.
how
I
many
love it.
deals
But
are
the thing
running?
is, it's great because one, so many people did it for me.
Hmm.
So it's just like, again, that's like a pace thing. Like
Yeah.
once you learn it and you see all he gives, it just naturally turns you into somebody who wants to be a giver back and answer questions. Like when I was asking a lot of dumb questions in the beginning, people didn't treat me like I was asking dumb questions.
Yeah.
And so now it's just, he cultivated that type of community where people hit you up and you're like, love it, love it. Happy to help, but also the more I talk about it, the more I say things out loud, the more questions I answer for people, just the better I get at it, right?
Yeah.
It's almost like a quick being a teacher, but for me, it's always everything's practical. So if I'm talking about it, I'm getting better. I
Yeah.
can learn how to say it more efficiently, smoother, and that whole nine. So yeah.
Yeah, yeah, for sure, for sure. Well, thank you for explaining all that because I know a lot of people are going to hop on here and be like, "Who's Pace?"
Oh,
So I figured we should probably go a little bit
yeah.
into that. He had, or does he still have it, the A&E show, or is that?
I don't know. I don't think he has it.
I feel
I
like
think
it's over. He did a
yeah, I
couple.
think it might be over. I'm not 100% sure. I don't think
Yeah.
he's doing it right now, but
Okay.
yeah.
Yeah. Yeah. Well, cool. Okay, so let's jump right in because I want to like respect your time. But let's just jump right in and say like, so a lot of people have never heard of like even the term creative financing.
Yeah.
Can you like break it down into like the simplest possible way so that people understand what that means? Because when you say it, most people and real estate agents, Don't.
Yeah, absolutely. So creative, yeah, yeah. So creative financing for me is
Mhm.
a solution to what the majority of the people are taught to do, right? The 95% of the things that the industry is taught is like a one lane, one trick pony. Maybe there's a couple of different like paths you can take, but at the end of the day, they all end up like here. Creative financing says like everyone's throwing this deal away. It is not possible. This seller is losing. There's no way to make money. Most people are like, I'm out.
Yeah.
Creative financing allows us to look at that, take that property, um, be creative with it, and deliver solutions that allow somebody to avoid a foreclosure, maybe not have to go through a bankruptcy.
Yep.
Maybe, from an investor's point of view, there's no equity in the home. So what am I going to do to buy a house with no equity? Creative
Yep.
financing allows the opportunity for an investor to win, a seller to win, an agent to win in a scenario where normally everyone would have put their hands up and walked away.
Yep. Yep. I literally just, like we were chatting just a few minutes ago, I literally just left a house where the agent literally only gave the seller 7 days. That was it. And then they were like, hands up, we're done. And I, when I talked to her, I was like, hold on a second. I might be able to figure this out. Uh,
Yeah.
yeah, yeah, it's definitely not going to be through traditional methods, but I mean, you can definitely figure things out. Kind of makes it fun too. It makes it a challenge, and because
Oh, absolutely.
yeah,
Yeah. Yeah, especially when you take a deal that
yeah,
even other investors who might understand creative a little bit think it's a throwaway, and you can take it and monetize it as an investor, help the seller, put the seller into a better situation, maybe put money into the pocket of an agent who thought it was an absolute zero.
yeah,
Those are absolutely rewarding, to
yeah,
do that, because you're like, yes, you know what I mean? It's
yep,
like type of approval that this is
yeah,
an amazing strategy. Um, you know, it's
yeah,
not needed every single time, don't get me wrong, but yeah, when all else is failing, creative financing usually can come for the win, which is
yeah,
sweet.
yeah, for sure. So in creative financing, there's a lot of terms. So we're just going to kind of start out with like one that is thrown around a lot, but people don't necessarily understand what it means because when people bring it up to me, I'm like, nah, that's not what it means. So, but we'll just jump right into it. What is subject to? What is that? And how does it help or could help the seller? And who's still in
Absolutely. Yeah.
mortgage?
So subject to is basically a buyer coming in and taking over that loan as is.
Okay.
Now, people watching that don't understand it are probably going to say,
Yeah.
"Oh, that's an assumption."
Assumption. That's what everyone says,
Yeah,
and I
everybody
wanted you
says.
to say that. So
Yeah, so
yeah,
it's not it is the better cousin of assuming a loan.
yeah.
We're very similar in that sense, but with an assumption, obviously, if I was to assume your loan, I have to still go get approved and everything.
Hmm.
With subject to, if I'm buying your home subject to that existing mortgage,
Hmm.
I will get the deed to your property with the debt remaining in your name. So that is subject to that existing mortgage.
Hmm.
So I can stop there, keep going. You let me
So
know, but that's
okay.
at a high level, that's it.
Yeah, yeah, yeah. So what's the difference? Because I know somebody's going to ask this. Well, isn't that just like seller financing? What's the difference between a sub to and seller financing? Because I mean,
Yeah,
these are questions people are going to ask.
sure. Yeah, yeah, absolutely. So the seller finance is really just the homeowner will become the bank. They
Mhm.
will take the equity that they have and put it as a note on the property, versus subject to is a bank owned note, Fannie, Penny Mac, Rocket Mortgage,
Yeah,
TD, whatever.
yeah.
Though they will have a promissory note and a mortgage on the property. A seller finance will do the same thing, but they're saying, "Hey, I don't need all my equity. I'll just put a promissory note and mortgage lien on the home, and I will finance it for you."
Yeah.
That is seller finance. Subject to, obviously, is the bank. The one little caveat that I'll add in here, which maybe it's me getting into the weeds, but these things excite me, so I'm going to say it.
Yeah.
When we do our subject twos, we do them as wraparound mortgages, which are it's mirrors that of like a seller finance in a
Hmm.
sense because we give that original seller a note on the property. We just wrap that original note
Hmm.
and we mirror the existing terms. So there'll be the first lien, which is like Penny Mac.
Yep.
And then there will be seller. We're going to just wrap their note, but the terms are going to be the same.
Yep.
So it's, hey, are we paying the seller, paying the bank? Those are moving together always.
Yeah.
But we do that as a security to that original seller so that they have a way out if a seller or if an investor, the buyer,
Hmm.
were to default or things don't go well. That's their
Yeah.
security.
Yeah. Okay. Well, okay. And so I have another question on this because this is going to be like people that are watching this are going to be like, what benefit does that, what is this all like? What's the benefit to the seller? Why would a seller agree to do this?
Yeah, the same reason anybody does anything in the world or
Yeah.
buys anything, it's because there's a problem that they're solving, right? We all
Yeah.
have problems in our day-to-day life, and most of us go to Amazon and find the solution to that problem, right?
Yeah.
We just go buy something.
Yeah.
So this is a solution to a problem, and that's the number one thing I'll say. If there is not a problem, there is no need to do subject to,
Yeah.
right? And that problem doesn't always mean bad.
Yeah.
Sometimes there's good problems that people are like interested in doing it for,
Yeah.
um, but it's solving a problem. So if a seller is in foreclosure, let's use the deal we did, for
Yeah.
example. That
Okay.
seller had got, and I don't remember all the details. It's been a few years,
Uh, I do. Yeah.
but it was the house was listed for pretty much the same exact amount that was on the mortgage,
Hmm.
meaning that there was no equity.
Yep.
So that when a buyer was coming in, that seller could not afford to pay closing costs, could not
Yep.
afford to pay the listing agent and the buying agent as it traditionally would.
Yep.
So, as most people desire when they sell their home, I think it's probably across the board 100%. Most people don't want to have to pay to
Yep.
sell their home.
Yeah.
So subject to is an amazing solution to that problem because we're able to come in, we subject to that existing mortgage. I will pay all closing costs. I will pay all agent commissions. And typically we'll throw some money into that seller's pocket. So you go from basically looking like you might have to pay 10, 15 grand to sell your house to maybe collecting 2,500, $5,000 plus the agents are getting paid, closing costs are covered. That's a pretty good trade-off from being down 15 to being like up 2.5 to 5. Nice little swing for somebody. That's a very
Yeah.
basic.
Yeah.
Somebody who's in foreclosure, that's probably the most popular one.
Yeah.
Somebody
Yeah.
who's in foreclosure, we can come in, take that property subject to, again, they were about to walk away and lose everything. They
Yep.
were gonna lose any equity they had in their house. They were gonna get that inevitable stain on their credit soul,
Yep.
where they're not gonna go get a loan for a long time.
Hmm.
Us coming in and purchasing the property subject to, we catch up the arrears, we take over the deed to the property subject to that existing mortgage. We put
Yeah.
some money in their pocket. We help them move. If there's a lot of equity, we might even make seller finance payments over time.
Yeah.
But the most important thing that it does too is it helps build that seller's credit back up because
Yep.
remember the mortgage is still in their name.
Yeah.
So when I'm making the payment, I'm making it against their name. Now the credit is seeing like, oh, okay, they're making their payments and making their payments over time.
Yeah.
Their credit's going up. So in a year, 12 months, 18, 24 months down the road, when a seller is back on their feet, they got their finances, maybe they got a new job, they
Hmm.
can actually go back out and get a new mortgage
Yeah.
because we'll cover the DTI, and their credit will be improved upon. So in
Yeah.
that case, that's usually like case number one of like how is it the most beneficial or who is it the most
Yeah.
beneficial? It's
Yeah.
somebody who is staring that, down the barrel of a foreclosure or
Yeah.
an auction in 2 weeks where we pretty much turn it around, we get them paid and we help them out long term with their credit. And it really is a win-win.
Yeah, for sure. So now we've talked about foreclosures, but how is it beneficial to like a traditional seller, a sub two?
how is it beneficial to a traditional seller? In what way?
Like, so, if a traditional seller wants to sell their house and like they can't sell it, and maybe
Sure.
they
Yeah.
want more than,
Got
yeah.
Yeah,
So I was
that
thinking
was
in
a
that
big,
direction.
yeah, it was a big one that we saw coming out of like the latest gold rush in like 20
Yeah,
2020, 2021. Everybody was getting 5, 10, 15% over asking.
yeah,
The problem that happened once that started leveling out is people were expecting to get that. So they might have put it on the market right at the downturn
yeah,
where people weren't getting 15%, but they were like, my neighbor got
yeah,
$500,000 for this house.
yep,
Now I'm only being offered 420. Get the heck out of here. I want 500.
yep.
So he can come in and say, great, Mr. Seller, I'm happy to pay you $500,000.
Hmm.
Even though nobody else in the market's even offering you 450 at the moment, we can pay you 500, and here's why. I'm going to take over your existing loan. I'm going to give
Yep,
you a fat down payment or pay all your equity, or I'm going to give you a down payment and make you payments over time. And what that does is that allows you to kind of pound your chest and say, I win. I got the highest possible price out of
yep,
anybody in the neighborhood. And here's how I did it. Or actually, they don't even say, here's how I did it, because they don't
yeah.
care. They
No,
just want to go tell everyone they got the highest price.
yeah,
That's really how we've helped people sell it traditionally, with just they were ego driven and they wanted the highest price.
yeah. For sure, for sure. So with sellers, what are the biggest misconceptions that you think sellers have with Sub2 and
That
creative?
it's a scam.
Yeah. That
This
it's
has been around.
illegal.
Yeah, it's illegal, right? That's what everyone says. So
Everyone says that.
it's been
Yeah.
around for, I don't know, longer than we've been alive. But
Yeah.
the problem is it was just never utilized. It
Yeah.
was one of those secrets that people kept. And here's the thing, the banks wanted that, like, it was in the bank's benefit
Yep.
to like make sure this gets buried and never utilized, because it's really maybe not to their advantage.
Yeah.
Although sometimes I can make the argument that it is.
Yeah.
But yeah, that's really it. It's just that it's an illegal, it's a scam. As an agent, they don't teach any of this when you're getting your license as a realtor. So
So yeah,
it's
yeah. And the weird part about it is that you do actually learn about it, but it's like it's gone. And it's
yeah,
funny because I went back through and I was like, no, you learned about it in like a blip, and then you see it on the HUD statement, but then it's like silent.
right, right.
Yeah.
So yeah, it was the industry for so many years,
Yeah.
not paying any attention to it, not utilizing it, saying, "Oh, yikes,
Yeah.
that no way."
Yeah.
It's normally too good to be true. It must
Yeah.
be illegal or a scam. So that's usually what we get. And sometimes it's impossible to overcome because you're not going to change people's minds. Other times, it just comes down to having a good conversation.
Yeah.
Showing examples, credibility always helps. How we've helped other people,
Mhm.
and obviously testimonials and things like that are important, because then
Yeah.
you can share references for people to go use. And then I would say for me, like, I always do my best to like drive somebody to go talk to an attorney, go talk to a title company that we
Yeah.
use, because me as an investor, I have a vested interest in this. So like,
Yeah.
I don't ever want to come off as scammy or anything like that, because yes, I am interested in buying the house. So yes, it is my job and my responsibility to kind of convince you.
Yeah.
But that can rub people the wrong way. So I really do try my best to say, why don't you go ask this attorney? Why don't you go ask this title company who will process the transaction, and get have them corroborate my story, so that you can say, oh, he's not just bull crapping me.
Yeah.
This is an attorney say it. And then once an attorney or a title company says it, usually there's really not much else they can say other than they don't want to do it. And then that's fine.
Yeah, 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 for sure. So with Sub2 and a lot of the different creative financing, how can this benefit just a buyer, a typical buyer in
Oh,
the market?
yeah.
So explain that because that's a big one.
Yeah. I think especially right now, the
Yes.
last 18 months, last 4 years, probably really.
Yeah.
It's just a lot harder for an investor to, cash flow on properties.
Yeah.
If we're buying a property, an investor loan's typically going to make you put 20% down.
Yep.
Now they're going to give you an 8% interest rate, and the payment's going to be $2,800,
Yeah.
and the rent that you can get for the property is $2,500. Well, I could probably get my 8-year-old son to tell you that if you bring in 25 and you have to pay 28, not really a good business. It's gonna be a hard business to sustain losing money every month. So for buyers like us who, will utilize this, it allows us to go and leverage better debt than what's available in the marketplace right now. So we do a lot. The majority of the properties we've bought in the last few years have been sub 4% interest rates. That people bought a house in 2020. Like I bought this house I'm in now, December 2020. I got a 2.875% interest rate.
Yeah.
Like never again will we get that.
Yeah.
So, but there's other people in that situation. A lot of people got into houses in 20 and 21 because they were able to afford on paper so much more until you get into the house, and then you have all the expenses of the house and you're like, I can't afford this. I'm out. Oh crap, I just bought the house 2 years ago. And for people who don't know, when you get a mortgage, pretty much the first few years are almost all interest only payments. So your principal balance does not go down that much.
No.
So you sell it after, year 2, year 3, you're going to be what we call the low equity situation.
Yeah.
And now you're like, crap, I just bought this 2 years ago. Now I have to pay to sell it. Hey, Mr. Creative Finance guy, like, where are you? And that's how it works. So.
Yeah, for sure. And also, just so you know, I just saw a stat yesterday that 74% of people have interest rates. What is it? Under 5%, under 5%. So
we want them all.
Yeah, I know. I saw that was like the first thing I thought of. I was like, oh, that's like, okay.
So many good ones. But there's probably, there's, I don't know the percentage, but I'm going to say probably 50% of those people are going to be people like me who are like, I'm almost like locked into my house. Like I will never sell this house. I will not, because of what I know now, I will not sell a if I want to move, which my wife wants to move to like somewhere warmer. I can only move after I lease option or seller finance this to somebody, because I don't want to lose the 2.875%. I don't want to give it back. Like that's me winning against the bank. And I want to keep that W. If I give that back to them, they're going to take that money and turn around and sell it to somebody for 6 or 7%.
I know.
Boo the banks for that. So
I'm in the same situation. Well, I bought this and built it to rent, but I'm in the same exact situation. I think it's like 275 or what it is. I've got so much equity. I think it's like almost 200, and I will never get rid of it. I know all my neighbors hate me but I've told them from day one I will be renting this, so they knew. But I I warned you. I did tell you day one. But anyways, so that's I thought that was an interesting statistic. So why should, because I have a lot of investors that I work with, and they're asking me, because I'll be like, hey, wait a minute, let's get you into Subto or creative financing, but they don't really understand all of it. Even traditional investors don't know about it. Why is it such a big benefit for an investor to learn about creative financing? Because a lot of them don't know.
Because it opens up the amount of deals that you'll be able to do. Right. So if you're looking at somebody like who's doing flips, they might look at 50 deals and finally pull the trigger on. Now, I don't know the nationwide, but I know a lot of buyers that I've worked with are okay. Like a traditional fix and flipper is okay making $30,000 or $40,000 on a deal, right? But they're going and getting a hard money loan, right? And paying interest only, and then selling a property, making 40 grand. Okay, great. Well, if you're looking at a property that it doesn't have a ton of equity. Therefore, they can't go and buy a property at 65% of the ARV
Yeah.
or 50%, right? Traditionally, you're trying to buy it super deep. Well,
Yeah.
that's not always the case, so they'll pass up that deal.
Yeah.
Well, if I can buy a deal that is subject to, I might be able to buy it at 75, 80%
Yeah.
because I can take it over sub two and my upfront capital and my holding costs. My upfront capital's maybe close to nothing, closing
Yeah.
costs, and then my holding costs are going to be small. So if I can then be okay making 20 grand on a house because I might only be 20 into it.
Yeah.
Right. Where like somebody else might have said, like, hey, I'm gonna go put $150,000 into this house. At the end of the day, after holding costs and closing and all that, I might
Yeah.
make 40 grand.
Yeah.
It's like, okay, that's great, but like I just made 20, but like I had really no risk,
Yeah.
right? Because I was my capital up front was so low. So it just brings up those opportunities to really go and look at these homes and say, oh, that's a quick cosmetic.
Yeah.
I might only need to put 10 grand into that house, and
Mhm.
my holding cost might be like 7,500 bucks all in for 2 months. Okay, I might be okay making 15, 20 grand really quick and just having a quick rip because we can, right?
Yeah. Yeah.
So that's really how a traditional investor can look at it and say, this wasn't a deal, and now with this strategy, this could be a deal. Now, obviously, I can't say that even I love to make just 20 grand, right? If we're doing
Yeah.
a flip, but those are the like things that those are the opportunities to do that through creative, is that you can go and have a bunch of little hitters. Not everything needs to be a
A home
50,
run. Yeah.
yeah, a 50% of ARV full gut rehab.
Yeah.
You can go out there and probably rip 4 or 5 of these at a time and make 100 grand like
Yeah.
that.
Yeah.
And be done in 6 months, like 4 months of all of them.
Yeah.
Not even.
Yeah.
So that's certainly a benefit. Like, again, there are companies that are doing a ton of full guts at the same time.
Yeah.
But unless you have that system process and all that stuff built, this just allows you really just to go and actually be a smaller player. You can
Yeah.
be a much smaller player and go do a lot of these things and make a very fine living doing that, through creative.
Yeah. Yeah, for sure. And I mean, taxes are that kill you. So there's even more ways you can handle that.
Oh yeah, well, yeah,
Taxes. Yeah, I've done a whole I did a whole video on the solo.
nice.
Yeah, because that's really the way to, when you get into it. And as well too. So one of the biggest questions that people come up with, like when we talk about Subto or creative financing, is the due on sale clause. That's the biggest fear. What's your thoughts on that?
My thoughts are I've never had to do it. So
Yeah.
that's
What is the
yeah,
average that people like that happens?
I don't know. I think it's happened like maybe 10 times to Pace, who owns over 1,000 doors. So
I know.
like
I was talking about that.
it's mostly an education piece for people involved,
Yeah.
right? For agents, for attorneys.
Mhm.
I just did I recorded a Zoom not too long ago, which I'll release it once this deal is over.
Yeah.
But I had an attorney of 40 years who had never heard of this. And as I was explaining it, you could like see his brain was turning.
Yeah.
And then finally he was like, oh my gosh, I think no, Andrew's right. Based on like everything that I know, like why would this happen? So like he just started like telling me how right I was the whole time. And I was just sitting back there almost like giggling to myself because I'm like, this guy's just figuring out on his own. But really that's what it is. It's just education piece. Now we have strategies to say, if this does happen, what do you do? Right? You can pivot the contract to a lease option.
Yep.
You could do a trust to make the person a beneficiary on that trust. So then legally they cannot call it due. So there's certainly strategies around it.
Yeah.
Land contracts, things of that nature you could do to avoid it in the first place or overcome. A lot of times just a normal human conversation with the lender could typically resolve it. At the end of the day, I think the most important thing for people to remember is these banks are in business to provide loans
Yep.
with the expectation that those loans are going to perform.
Yeah.
So as long as we come in and we make sure that that loan continues to perform,
Yep.
I promise you, there's no bank who has a department that sits there and reads
Yeah.
into the tea leaves of performing loans. If
Yeah.
a loan is performing, it notifies nobody.
Yeah.
You do something wrong, right? You let it. The number one thing for that is you let the insurance lapse.
Yeah.
Your insurance lapses, it sends a atom bomb of red flags to the systems of the banks, and they certainly come calling. So
Yeah.
get a TC, do the insurance the right way,
Yeah.
so that the insurance does not lapse, and then stay on top of it. Like obviously you
Yeah.
have a system, have a process so that those things don't happen, because that is 95% of the time why it is called due, is because an insurance will lapse. It'll send a red flag. They will go in, do an audit and say, not now. And then you
Yeah.
call them and you're like, try to get
Yeah.
out. But hey, knock on wood, hasn't happened to us.
Yeah.
But yeah.
Exactly. Yeah. So, what are the common, like the biggest mistakes people make when they're trying to structure deals? Because I know people are going to watch this and they're going to be like, "Oh, okay, I can run out and do this."
Yeah, they offer the world when the world's not available to
Yeah.
taking. The biggest mistake I see with people getting into creative financing is forcing a deal.
Hmm.
Not every foreclosure is
I know.
a deal you can save, unfortunately, right? We
Yeah.
would love to save everybody. Not every deal is a deal to save. I think it's very important to make sure that if you're taking over someone's mortgage or doing a deal like that, that you don't become the one that is now underwater
Yeah.
and you carry that burden for somebody else.
Yeah.
Yes, we're here to help sellers. We want to, make it a win-win for everybody,
Hmm.
but don't take on someone else's problems to now be your problems, because ultimately those problems will become their problems again, because again,
Yeah.
their name is still out there. So
Yeah.
that's really it. It's just knowing how to structure the deal, right? With creative, for me, anytime I do underwriting or structuring a deal, it's always a reverse engineer
Yeah.
of what does it look like at the end,
Mhm.
payment wise. Right. I want to always offer a seller as much as I can up front,
Mhm.
but we do the strategy of private money lenders. So sure, I could offer that person a lot, but then that means my private money is gonna be larger, which means
Mhm.
my private money payment's gonna be
Yeah.
larger, which now means I may be actually underwater on my cash flow. So like you just have to have those numbers and you have to understand exactly excuse me, what that looks like. So yeah, it's really just reverse engineering the numbers to say at the end of the day, if I own this property, these will be the numbers. This will be the money I have into it.
Mhm.
This is how much I can get for rent. This is how much the current mortgage payment is. Maybe there's a seller finance payment. Maybe there's
Mhm.
a PML payment. And
Yeah.
at the end of the day, if all of that adds up and there's still cash flow, great. If there's not, I look at it and say, listen, I can offer you X, Y, or Z, but I can't offer you a high purchase price, a high down payment, a high
Yeah.
monthly payment, right? Because um, now it's not a good deal. And I would say the number one takeaway for all of this is that when talking with somebody who's in this situation, uh, yes, there's security documents you can put in place, but the number one security that or risk mitigation that you could give to a seller
Yeah.
is that the investor is buying a good deal.
Mhm.
So the reason these things go bad is because people buy a bad deal.
Yeah.
They want to they chase an interest rate where every other number doesn't make sense, but they're chasing this interest rate. Now,
Yeah.
you have to have deep pockets if you're chasing that, because you maybe like Pace will buy for depreciation,
Yeah.
right?
Yeah.
He may be okay losing a couple $100 a month,
Yeah.
but most people aren't okay losing money every month.
Yeah.
So yeah, it's just really, you got to understand the numbers. And you have to just be very upfront with sellers. And I think for me, it's always buy a good deal, because that is the only way you can protect the seller truly, is to know that you are buying a good deal, you've done your due diligence, your underwriting, everything checks out.
Yeah.
You're happy to buy it, and that's how you're successful. If
Yeah.
you're like putting something under contract, hoping that you'll go find a buyer, but it's not a deal that you would buy, maybe you're selling it to another investor, that's where people start getting in trouble.
Yeah.
Because they're just locking things up for no reason.
Yep. Yeah.
And yeah, so that's certainly a problem. But yeah,
Yeah.
buy a good deal. Um, and be very upfront with sellers. Tell them
Yeah.
that. I
Yeah.
always tell them that it's not that I'm trying to haggle you down. It's not that I actually want to get you the most I can. But if I buy a bad deal, you're now at risk.
Yeah.
Don't let me buy a bad deal, because that's only putting you at risk.
Oh yeah. Yeah, definitely. Definitely. Yeah, for sure. I agree with you 100%. So with all the deals that you've done, what's like the best deal that you've
Oh,
done that everybody's had a win-win?
yeah. So it's the deal I was telling you about before we jumped on.
Oh, okay.
I think
That was a pretty good
it
deal.
may win creative deal of the year. I'm hoping. Fingers crossed.
Yeah.
So it was a property that was $1.3 million in debt.
Mm.
A home couple had a business that went belly up during COVID. It
Hmm.
was a hot sauce business,
Oh wow.
and they had all their products at the port. It got
Yeah.
stuck at the port.
Ah,
And this is like in the heart of COVID, everything shut down.
yeah.
Well, by the time everything got turned back on and they released their product had an expiration date of under 1 year.
Mm.
So it all got thrown out automatically. So they
Ah,
lost $250,000 of inventory, and then
oh,
made another series of not great decisions thereafter.
yeah.
And they ended up getting $750,000 of business liens slapped against their house.
Mm.
Um, and unfortunately, they ended up getting divorced,
Oh,
and they were
yeah.
walking away. So it was my buddy who's a GC
Yeah.
here locally that was doing work at this guy's father's house, and said, "Hey,
Mhm.
we buy. I got a guy who's looking to buy foreclosures and yada yada." He's like, "Oh, my son's in foreclosure."
Yeah.
Luckily, he lives 2 neighborhoods away from me. So I went over there. He's like, "I'm walking away." And I'm like, "Wait, let's talk about this for a second."
Yeah.
So ultimately, we come to an agreement that we'll take the property over subject to all of the debt. And we then we bought it under a Nevada LLC.
Yeah.
Uh, Number one, because Nevada has laws that are a little bit more lenient. Plus, one of my partners was out there, who's an
Yeah.
enrolled agent, so he's an experienced, in fighting these cases.
Hmm.
We then went and filed a Chapter 11, Subchapter 5 bankruptcy against the house,
Mm.
and which then ultimately we got confirmed. No one showed up to the court, right? None of the creditors showed up to
Yeah.
object anything. They didn't know what was going on, really.
Yeah.
And next thing you know, we got $765,000 of liens dropped off the house, only to be left where it was the first position mortgage at $400,000, 3.99% interest rate.
Wow.
And it had an ARV of 700. So we went from 1.3
Yeah.
underwater, right? Being 700 plus $1,000 underwater,
Yeah.
to having $300,000 of spread. We put about 150 into it,
Mm.
accepted an offer in December for 715.
Oh wow.
Now it's been delayed for a month and a week exactly,
Yeah.
because the title companies were just like, this file got dropped on their desk and it like blew their brain. They like
Yeah.
couldn't comprehend what we did, yes, all that. So yeah, that was my most creative deal. That was a deal that everybody looked at and said, there's no way to make a single dollar. And yeah, we came in $1.3 million of debt, $756,000 underwater,
Mm,
and we're going to net about $125,000 on that deal. So
mm,
to have that type of swing
yeah.
is the only solution was creative financing. That
Yeah.
was simply it. So yeah, that was like that's my
Win.
golden creative deal at the moment.
Hmm.
I probably will never top it, but
Yeah.
the cool thing is it is such a dramatic story
Hmm.
that it really paints the picture of how creative possibilities of creative financing.
Yeah.
It's cool to be like, oh yeah, well, we took a property over that's in foreclosure. We gave
Yeah.
this person a couple $1,000, and this one is just like such eye-popping numbers that you're like, what the? People are like, how?
Yeah.
How is that even possible? And it's like, creative financing for the win. And you just gotta know people. You gotta know what. Yeah, you just gotta do the homework, and you gotta continue to fail forward. I know
Yeah.
nothing about bankruptcies. Let me tell you, like that's what I'll say to everybody. I know nothing about
Yeah.
it. But Pace highlighted a guy in the community. His name's Chris Craig.
Yeah.
Fantastic, crazy smart guy.
Yeah.
Highlighted him on a family night Zoom. It just so happened, weird timing, that my buddy called me the next day. Went
Mm,
over there, and then I called Chris the next morning, and I was like, hey, Chris, my name's Andrew. You were highlighted last night. I think I have exactly what you were talking about. And he
mhm.
was like, holy crap. Yeah, you do.
Yeah.
And then it took like this is the first time I'd ever talked to him, and now he's a partner. We're looking at some other cool projects, but yeah, so this is that's again community driven.
Mhm.
Without him, I would have been another investor that said, this is a nothing burger. What am I supposed to do with all this debt?
Yeah.
Uh, I just, luckily for Pace and me, like a guy presented that knew what to do. And I said, let's do this together, man. And I'll run
Yeah.
everything here. You figure out all the crazy bankruptcy stuff. And uh, absolutely melts my brain every time we talk about it still. Cause I'm like, what does some of this even mean? But
Yeah.
great thing is like, that's what I was trying to tell people all the time. Like, who cares? I didn't need to know that stuff. I don't need to know that stuff.
Yeah.
I need to be able to tell the cool story now. And I needed to know the pieces that I did to contribute and to get the deal done. And that's it. So it's like, you look at these things and you're like, no way. It's like, yes. I always tell myself, yes way. Like, yes, yes. I just got to find the who to help me
Yeah.
do it. And that is the only, like, that's the solution to all of this is just fail forward, go create like chaos and find yourself in like uh all like this mess of like chaos, like, oh my gosh, I got all these things going on. And then you just go find the who to help you with each thing. And next thing you know, you got all these deals, and you may end up like me and like stumble into what may be the creative deal of the year or maybe of all time so far within Pace's community,
Yeah.
which is really cool. So I'm like, fingers crossed that like if someone's got something crazier than that, I'm like, hats off to you, because
Yeah.
that for me it's probably the craziest one I'll do.
Yeah. Yeah. It's so funny too because you were talking about it. I'm like following everything, but I'm like the bankruptcy thing. That like is the one that like I'm like, wait a minute, how does that work? Did you I'm still confused. Like on like
Yeah,
did you
yeah.
go
So
how could you go I have another thing, another deal that they're like trying to go bankrupt on the title or the trust, right? Is that kind of what you guys did? Or like how does it that's the
yeah,
part
yeah. I
throwing
mean,
me.
I'll end up butchering it. Here's what I'll say. After this closes this week, I'm gonna do a bit of a deeper dive with
Okay.
Chris and really lay it out.
Okay.
Chris posted on it in the Subto group
Yeah, I'll
too.
have to find
I
it.
could actually tag you and you can
Yeah,
read
tag me in it. Yeah.
here's the thing. That's like not me. Like I am when talking about this,
Yeah.
the side of me comes out where I'm just like, I don't know. I'll tell you the cool story and
Yeah.
we made money,
Yeah.
but the legalities and everything, it's just like I don't do lawyer talk. I it's why I hate reading contracts and why I hire a TC every single
Yeah.
time. So I'm like, read this and just like put it in layman's terms. Like all this weird lawyer way of saying things. I'm like, nah, just tell me, am I protected? Make sure that like
Yeah.
my best interest and I'll sign it. So
Yeah.
that's really the same thing with Chris. I was like, whatever, you tell me, Chris. Now, with that said, like it took 15 months and
Hmm.
11 of those months, I went to bed every night thinking, did I just take on $1.3 million of debt?
Yeah.
Like,
Yeah.
what am I going to do with that debt? And what happens if this thing goes wrong?
Yeah.
Now, like, I don't know. I asked myself that after I got into the deal, which, like, I'm happy that I did that, right? Because now I've learned a ton.
Yeah.
But most people would have like probably asked all those questions first and never like jumped into it.
Yeah.
I maybe am a little bit more risk adverse. I'll take I don't know. Like I just jumped in and then I woke up one day and I was like, oh my God, what happens if this fails?
Yeah.
Like what am I supposed to do? But
Yeah.
I just was like, I don't know. Everyone told me like just go forward and keep failing forward and you'll learn and get better.
Yeah.
And yeah, now we're here looking at this deal and it's like
That's
amazing.
pretty
So
cool.
yeah.
That's so cool. Now I'm gonna have to figure out that other part because I'm like, okay, where am I gonna see this? Because you know me, I'm always like calling you with like crazy stuff
Yeah,
that
yeah.
I
Well, so
find.
it,
So
it's obviously it had to do with the business liens too. Chapter 11, subchapter 5.
yeah, I'll have to read. Yeah, I'll have to
Yeah,
read, figure that out.
it's good though.
Yeah.
It really is good. And at the end of the day, they could have come and objected,
Hmm.
and we would have been SOL.
Yeah.
Really, I would have probably only been out the money that I had like invested in appraisals
Yeah.
and lawyer fees and things of that nature.
Yeah.
But yeah, because we did a quick claim deed, right? Because
Mhm.
we quick claimed it over. So at the end of the day, this gentleman is still filing a personal bankruptcy, like
Oh,
probably next month once
okay.
this.
Okay. Well, that makes sense. Oh,
So like
okay.
he's
That
still
makes a lot
going to
more.
do, but like we took care of all of this stuff off of his name and business and all that stuff. Now he's
Okay.
just going to go do his own personal credit that
Okay.
he's underwater in. Uh,
Okay.
yeah, so that yeah, it's and again they didn't show up. Now, listen, there's definitely some a legal game that is played with
Yeah.
like getting a stack of papers this thick
Yeah.
and maybe the only important ones like right here.
Yeah.
And how many people read all that stuff,
Yeah.
And it was a New Jersey bank.
Oh, yeah.
They're getting a bankruptcy letter from LLC in Nevada. They're probably like, what the heck is this?
Yeah. Yeah, for
So
sure.
really just it's just the game that was created that we play.
Yeah.
We just play the game and um, I don't know 100%, but I think this was actually the first one in the history of the US to have this actually happen.
Oh,
So
really? Okay.
yeah, based
Super
on like
interesting.
yeah, so it was based on series reorganization of series LLCs and so just like all these different components put together, I believe it was the first confirmed
Hmm.
case of this nature in the
Wow.
US. So
Crazy.
yeah, yeah,
Yeah.
which I'm like, Chris, oh my God, good thing you didn't tell me that like before.
Yeah.
Like, by the way, this has never been done before.
And your name's on it now.
Yeah,
So,
so I'm like, now I'm like, hey, I am the first one in the history of the US. It's cool to say that, but like, the fear of what that would have been like beforehand would have been probably a little uncomfortable. But yeah, I learned that like Chris made the post and I read it up. I was like, first in US history. I'm like, what? What do you mean? So yeah, really, it was a kind of
like
funny way
the
to put
light,
it
the
out.
spotlight's on you. They're like,
Yeah, right. It was deer in headlights. Deer in headlights.
yeah, yeah. But now that
That's
you're like,
really it's how you learn this stuff. So
yeah, yeah, definitely, definitely. I agree with you on that one. Well, I have taken so much of your time today, and
oh, good, having fun.
yeah, I really, really, really appreciate it. And I hope you can come on another time. We could talk about another topic because there's so
Yes,
many topics
yes, of
with
course.
creative and
Mhm.
like, I mean, I can explain it, but I think sometimes it comes out better from, somebody else that does
Yeah,
this all the time since I sell a lot of traditional real estate.
yeah,
So I truly, truly appreciate you coming on, and all of your contact information will be below in the comments. We'll definitely have that there. But if you want to give anybody any of your information now that they can follow you on Instagram or
yeah.
What's your
Yeah,
handle?
absolutely.
Yeah,
My handle right here-ish,
it's right
Andrew
there.
Murray,
Yeah.
REI. I got a common name, so I had to throw something on the end of it.
Yeah.
There's like 100 Andrew Murrays in this world. There's like vineyards in California,
Yeah.
professional tennis players with the same name. So
Yep.
Andrew Murray REI on Instagram, Andrew Murray Facebook. Yeah, just reach out if you need any help.
I can find you too.
Yeah,
So,
absolutely. So yeah,
yeah.
that's really it. Andrew at the Andrew Murray is my email. If you want to send me
Okay.
something, I'll be
Cool,
happy.
cool, cool, cool. Yeah, and you can always find you can always find Andrew in Subto as well. If
Oh
you
yeah,
are a member or would like to be a member, you can definitely join Subto, and he's all over Subto as well. I just happened to be lucky enough to do a deal with him years ago.
yeah, yeah.
So
And
probably
that was
met.
your first. That was your first creative experience, right?
Yeah, yeah, it was. Yeah, and yeah, we did.
We should go over that another time because
Yeah,
it's
yeah, we
funny. I
did.
remember I
Oh,
I was sitting in my car in my driveway. I think it was like 11 o'clock at night.
yes, you were. You were.
Yeah, and we
Yeah.
were we were talking about this deal. Yeah, you and Chad were. I remember that. That was like
Yeah.
so long ago.
Yeah, and I saw Pace a couple weeks ago, and I told him I was like, Andrew's doing so good. Like that was like right back in the day when you like I think you first started, and I was telling
I
Pace
was a little,
that.
yeah, I was still newer then. Yeah.
Yeah, yeah, and I was telling Pace that I was like, he's doing so good. I gave him such a hard time,
Yeah.
like
I know
hardcore.
that's actually it's funny because right after that, that actually gave me a ton of confidence because you did grill the living crap out of us, out of me, and I'm like, I remember being like at some points being like, oh, she's got me. And then like you like coming around being like, all right, like you came back on board a little bit. And then you would like beat me up a little bit and then be back on board. And I was like, oh my gosh. I was like, she definitely is not doing this. Oh, I think she's gonna, oh, definitely not. Oh, and the next thing you know, we did the deal.
Yeah,
And yeah, it was really awesome. So no, I do remember that so much because I remember my wife kept calling me like, what are you doing?
yeah,
Like, got home and she's like, you're still in the car. I was in the car for like 2 hours,
that's
uh,
funny.
going,
Yeah,
going over this, trying to get this deal closed.
yeah,
And
yeah.
now we're here. You're in the community.
Yeah.
It's amazing. Yeah.
Yeah. Well, because like for real estate agents, we're kind of weird. Like we'll like we've always like dug into like hard stuff. I mean that we're known for that.
Yeah.
You can talk to my old broker in charge, who will tell
Yeah.
you that if it's gonna be crazy, I'm gonna do it.
Yeah.
Yeah, and we're gonna try to figure out anything possible. So it just was like I had to wrap my head around it because I'd learned about it, but not, you only learn like a blip. So to understand it, and I hate failing, and I hate like I don't like if I put something up for sale or whatever, I'm gonna get it sold. I'm gonna figure
Yeah.
it out. So that I just didn't want to fail, and I don't want to like even though he probably didn't. He probably still doesn't care that particular seller. I don't even know if he cares what we did, but I was like, dude, he's young. He doesn't want to ruin his credit and his life. So for sure.
And I think that right there, what you said is why more agents, I think, need to adapt it because I say this all the time. It's like
Yeah.
we go after a lot of like what's quote unquote nearly expired. I know a lot of people go after expired listings, but
Yeah.
we do target some nearly expireds and
Yeah.
say exactly what you just said. Hey, like this could be an expired, this could be an L for you
Yeah.
whether nobody else sees it as an L or not, like somebody like yourself is going to take it as an L and
Yeah.
you're like, that sucks. And
Yes.
everyone else around you is gonna be like, you're doing great. You're gonna be like, I lost that one.
Yeah.
Right. And like, it's coming in, you're like, okay, here's a way for you to get the win. There's agents, we've done deals where there's been like 6 days left in their contract. And I've been with the seller and I've been like, I can wait 6 days and we can cut this agent out. Or why don't I build a relationship with this agent and say, hey, why don't we get this done? You're about to be expired in six
Yeah.
days. I'll keep you on board and let's do this deal. And now you get to walk away saying, this was so close to being failed and I got a W out of it. Like,
Yeah.
pat me on the back, and
Yeah.
it's like, perfect, awesome. But that's, that mindset is what I think separates people. And obviously it drove you to here because you're like, oh wow, now my tool belt just got thicker of
Yeah.
like I have all these different things I can pull from now to get a deal done versus saying, you know what? I had a couple open houses over 6 months. I couldn't get it done. It's expired. I'll just move on. Who cares? You
Yeah.
know? Where
Yeah.
it's like, no, it's like I'm like 100 for 100. I'm trying to keep that streak.
Yeah, 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 and that's me. And it's so
Yeah.
funny because I'll call you with some of my deals. That one deal, like I had to finally let it go because I was like, because you were like, I would never do that. I would never do that. I'm like, but I figured it out. I can make this work.
Yeah.
But then I was
Yeah.
like,
Yeah. It's tough.
but I had to let it go. I hated,
Yeah.
yeah, but that was,
You know,
a deal for me. It wasn't like,
yeah.
yeah, but it just burned me up. Still, I had to let it go. But like sometimes, like,
Yeah. Those are usually,
you're,
usually you
yeah.
can look back and be like, that was a great not buy, you know?
Yeah, I hate it though because I think
Yeah.
like,
Me too.
yeah, but you were like,
It
oh,
happens, but
don't let him stay there. You can't.
yeah.
And I'm like, but I figured it out.
Yeah.
But
Yeah. Yeah.
yeah,
Yeah.
but I couldn't do it after all. I couldn't do it. Like I couldn't
Yeah.
do it. Yeah. So anyways, because I kept thinking about what you were saying. You're like, I would not do that. And I'm like, I know, but I also like to help
Well,
people.
and you asked me earlier, like what, like that is exactly where people don't listen to their gut
Yeah.
and they end up going into the deal anyway, and then they're
Yeah.
in it, and what always happens is you're like, oh, I should have listened to my gut, you know?
Yeah. Yep.
Um, so
Yep.
when
Yep. I
your
did
gut's
listen to
telling
it.
you something like that, especially with these type of investments, it's like, yes,
Yeah.
you might, it's a win. It could be a win to lose,
Yeah.
right? Like a loss could be a win
Yeah.
because it may not have like the alternative loss could have been significantly worse.
Yeah. For
So
sure.
it's yeah.
Yeah, crazy. Well, again, we're chatting longer, so we
Yeah,
definitely need you to come back on and chat with
absolutely.
us. We can
Anytime.
talk about more deals and more crazy creative financing. And hopefully, like a lot of my investors ask me about this. I'm super excited to put this video out and so that we can educate more of them and more people in general.
Yeah,
So you and I can help way more buyers, sellers,
love
and
it.
everything in between. But
Yep.
thank you again, Andrew. And you can get a hold of me if you need Andrew's information, but also, like he had said before, where you can look right down and see his handle. And also, you can find him by his name or he's in Subto. And I'll list all his contact information below in the comments. But thank you again, Andrew. You've been
Yeah.
amazing and fabulous. And
Thank you.
until you come back on.
All right,
Thanks.
sounds good.
Thanks. Bye.
Bye.